Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Apurva Prasad, the research analyst at HDFC Securities, joins us on the phone line. Apurva, hi, good morning. If you go by what's happened in the past, many of these high-profile exits have been a great buying opportunity for investors. Do you think this time could be the same, or given the fact that the stock has rallied so much, we could see a near-term pressure here?
Sure. So I think it's definitely, as you said, like it's a negative development. Let's roll back, to what's happened, over the last year. If you see, a large part of the rally can really be attributed to stability post the transition that was really happening, or that happened a year back, plus the capital allocation which they continued with. So I think these two were, pretty much large determinants, of the company's performance. And let me just also add the USD INR, how that's really played out. So having said that, I think, yes, it does sort of question the stability, at least in the near term. But we also must realize one thing, that, that a lot of it is, completely institutionalized. So while this would be a near-term setback, I think a lot of processes are in place. However, I think relative metrics will tend to become more and more important, because, you have a peer which is probably at half the attrition, even if it's company-wide. So I think that's
So basically, are you reducing your price target at all? I mean, it's difficult to believe that high-profile exits won't have any impact, especially when they are so frequent. So you reduce your price target at all?
No, so we maintain our multiple of 18 times. It's nearly fairly valued right now, but I think correction to a larger extent may become an opportunity. But at where it is, at current levels, I think it's nearly fairly valued.
Okay. Apurva, good morning. So, I mean, from your point of view, this TCS versus Infosys, this year, of course, both have rallied almost same amount. But in terms of valuation premium, you reckon TCS could command a bit more from now?
Yeah, I think so. I mean, Infosys is about 20% discount currently. I think, we have a 25% discount that we're valuing. So we're valuing Infosys at 18 times and TCS at 24 times on FY20. I think that will definitely hold on, for a variety of reasons. Fact being that even if you look at the earnings growth performance, it's probably 1.4x the pace of Infosys, I think. Leave all else, and the stability part and the attrition part, and the overall execution part. So I think that premium is likely to continue and probably even expand.
Has the past history suggested that growth has been impacted post these, high-profile resignations? Because that's the only concern that the street has now with respect to Infosys, right? That growth is lagging its peers like TCS. You think with this high-profile resignation, things could get worse on the growth front, or has it not impacted in the past?
Not really. So I think it's more of, growth impact. If it all can be attributed, it's probably been more in the case of, more vertical head transitions or CEO transitions, not really in the case of CFOs. Having said that, a lot of these CFOs have been internal candidates in the past, So we need to see how that transition also happens going forward. In the past, as I said, they've all been internal candidates for the CFO. So that's another thing, but not really. I don't see a very significant business impact. I think, as I said, a lot of policies are institutionalized, so I don't see really a risk to the capital allocation policy that was laid out earlier.